Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Balkis binti Muhammad Nazri. My matric number 1242423. Today, our group will be presenting on the topic challenges and opportunities of Islamic finance in the modern world. Islamic finance has grown significantly in recent years as an ethical and Sharia-compliant alternative to conventional financial systems. In today's modern world, it plays an increasingly important role in promoting economic stability, social justice, and responsible financial behavior. Although it has great potential, Islamic finance continues to face challenges while also offering meaningful opportunities for financial development globally. In our presentation, we will first discuss the main challenges faced by Islamic finance, followed by the opportunities it presents in the modern financial landscape.
Islamic finance still struggles with one major issue, the lack of standardization. Different countries follow different Sharia interpretation when creating financial products. For example, a financial product that is considered halal in Malaysia may not be accepted in Saudi Arabia or Indonesia. Because of this, banks face difficulty expanding their products internationally, and investors can feel uncertain about whether a product is truly Sharia compliant across markets. This inconsistency slows down innovation and reduces confidence in the global industry. Although institutions such as AAOIFI and IFSP are working towards harmonizing standards, the progress is slow and standardization remains a serious challenge that must be addressed.
Limited awareness and understanding of Islamic finance. For the first challenge, I will focus on the issue of low awareness. Many individuals and investors still do not clearly understand the fundamental differences between Islamic finance and conventional finance, such as the concept of the riba, gharar, and profit sharing. In addition, the level of exposure through education and media is still limited, which affects public confidence and choosing Islamic financial products. Due to this lack of understanding, the overall adoption rate of Islamic finance remains lower.
One major challenge in Islamic finance is the shortage of qualified Sharia experts. Islamic finance needs scholars who understand both Sharia principle and modern financial system. But the number of people trained in both areas is still very small. Because of this, financial institutions often face delays when developing or approving new Islamic products. This also leads to differences in Sharia interpretation between countries and banks, which affect consistency and investor confidence. With only a limited pool of experts handling many responsibilities, the industry faces a bottleneck that slows down growth and innovation. Therefore, increasing the number of trained Sharia experts is crucial for the future development of Islamic finance.
My name is Aina Wajiha binti Muhammad Sain. My matric number is 1242420. Now, I will explain one of the major challenges in Islamic finance, which is the differences in regulatory and legal frameworks across countries. First is different Sharia standard. Different countries follow different interpretations of Sharia. Because of this, a financial product that is approved in one country may not meet the requirement in another. This creates inconsistency within the Islamic finance industry. Second is hard to harmonize globally. These variations make it difficult to create a globally unified Islamic financial system. It's become challenging to standardize products and ensure they are accepted across different markets. Third is higher compliance. Financial institutions must go through extra compliance steps to meet each country's regulations. This increases operational costs, take more time and slow down the development of new product. Fourth is lower foreign investment. Foreign investors tend to be hesitant when regulations are inconsistent and unclear. This uncertainty reduces investor confidence and limits the growth of Islamic finance at the same global level. So, overall, these regulatory differences slow down the growth of Islamic finance globally and make it harder for the industry to expand consistently.
While challenges exist, Islamic finance has a strong opportunity through the growth of the sukuk market. Sukuk is increasingly used by governments and corporations to finance infrastructure and development projects. Unlike conventional bonds, sukuk is asset-backed, meaning it is linked to a real economic activities. This makes sukuk more transparent and ethical, attracting both Muslim and non-Muslim investors who prefer responsible and low-risk investments. Many countries, including Malaysia, Saudi Arabia, and Indonesia, continue to issue sukuk for projects such as highways, hospitals, and many more. With growing global demand, sukuk has the potential to expand further and become a major driving force in international Islamic finance.
Increasing global demand for ethical and socially responsible finance. For the opportunity, there is strong global trends toward ethical and socially responsible finance. The aligns closely with Islamic financial principles which emphasize fairness, transparency, and social benefits. Because of this, Islamic finance is becoming more appealing not only Muslim investors but also to non-Muslim investors who prefer ethical investment alternatives. This creates a significant opportunity for the Islamic finance industry to expand into global markets.
One promising opportunity for Islamic finance is its expansion into new markets. Today, many non-Muslim countries such as the UK, Japan, and Singapore are exploring Islamic finance because of its ethical, transparent, and stable financial principles. This creates new demand for products like Islamic banking, takaful, and especially sukuk. Entering these new markets allows the industry to reach a wider global audience and attract international investors. It also strengthens the global presence of Islamic finance and encourages more innovation. Overall, expanding into new markets gives Islamic finance a strong platform for long-term worldwide growth.
Last but not least, the opportunity in greater financial inclusion with support for SMEs and infrastructure. Islamic finance presents a strong opportunity to enhance financial inclusion by providing Sharia-compliant financial service to underserved communities. It can also support the growth of small and medium enterprises through asset-based and risk-sharing financing models. In addition, instruments like sukuk enable long-term funding for major infrastructure projects such as transportation, healthcare, and education.
In conclusion, the Islamic finance industry is at a critical stage of development, needing to overcome structural and workforce limitations to progress further. Significant opportunities exist through product innovations, increased investor engagement, and broader community participations. With the right strategies, support from authorities, and global collaborations, Islamic finance has the potential to become a cornerstone for a more equitable, sustainable, and inclusive financial system.